What's going on, guys, and welcome back to another great video on our channel. Cryptocurrencies are often known to crash from time to time, and knowing what to do when it inevitably happens again is a good thing. So in this video, we're taking a look at how you should handle a crypto crash. Number 5, zoom out.
We need to look at other asset classes first. Zooming out will help us set the stage for what's going on in the world.
When a crypto market crash happens, one of the major mistakes that's made by many people is that they focus on the short-term prices. If another crypto crash happens, one of the best things to do would be to zoom out and take a look at how the prices for that particular coin or currency over the past year have been. Better yet, you should zoom out further and just admire the fact that some cryptos like Bitcoin have skyrocketed over the past few years. When you witness that graph, all your current worries should somewhat be alleviated. This happens because you're once more made sure of the potential of the particular currency you're desperately holding on to in terms of crisis. But there's a lot more that you can do than just zooming out. Number 4, analyzing your portfolio.
By the time that I read enough about it and felt comfortable with it, it had gone up pretty significantly. So if we fall down more, I wouldn't.
Since cryptocurrency is still a brand new concept when thinking in terms of the broader financial market, it might not be a good idea to put all your eggs into this single basket. Diversifying your portfolio to include some of the other established assets might be a good way to stave off a bad day in the crypto world. Some of the established assets might include things like stocks in public companies, an ETF, or you can even try owning some real estate. These are all things that have a lot more backing and support than cryptocurrency, which make them a good investment for your portfolio. Number 3, avoid panicking.
Is it time to panic? No, don't panic. Never panic. The top is not even close.
Since a lot of the people that are buying cryptocurrency are much younger in age than the established stockbrokers might be, some form of panic is sure to set in when a crash happens. Due to the lack of experience, you might not know how to react when a currency dips down to a level that you might not have seen it at. In this moment, one of the best and most profound things to do would be to take a deep breath and not panic. We say this because panicking over a dip in price of a certain coin only leads to people selling off that coin, which just starts a vicious cycle that just keeps on plummeting the price of that coin to new lows. So panic selling is a thing that must be avoided as long as you can hold off on doing so. Number 2, try analyzing the reason.
The current 11.5% crash.
If you're a smart investor, when you initially buy into a cryptocurrency, you'll have a general reason as to why you're buying it. For example, if you get your hands on Bitcoin, you might be thinking that it has a lot of potential in it. So when a crypto crash happens, one of the first things you should do is check whether the reason you first bought the coin still holds true. If you had gotten your hands on a certain coin because it had a total market cap above a certain number and a crash makes it go lower than that number, then that might be one way you could look at reasoning with yourself, and in such a case, you would probably think of selling off. This is just a simple example of logically trying to maneuver through a crypto crash. Number 1, buy the dip.
The dip is defined as a sudden and sustained drop in price. This is a vague definition because
one of the most popular phrases in the trading business is buying the dip, and there's a very good reason it has gained so much popularity. That reason being, in some scenarios, it's a wise decision to make. It might be obvious, but if the value of a currency such as Bitcoin crashes to a level you haven't seen it at, it would be a very good idea to buy it at that low level. In this case, you'll have bought a certain coin as if it were on sale. While it might be useful at times, you should still wait a bit and see just how much a coin is crashing. If the value of the coin doesn't seem to be stabilizing at a certain level, then it might be a better idea to just keep a watchful eye on it. This is because if you buy a coin and then it keeps on crashing, you will have turned that opportunity into a loss for yourself. So it's important to be smart and analytical in such moments. These were some of the ways you should handle a crypto crash. At this point, crypto crashing is such an inevitability that you should do all you can to prepare for it. This brings us to the end of our video. Don't forget to subscribe to our channel and hit that bell so you don't miss out on future videos. If you enjoyed the content, then do let us know by smashing that like button, and until next time, Take care and goodbye.